Hello, everyone. Welcome to Wall Street for Main Street podcast. My name is Mo Daoud, and today's special guest is a returning guest, Fabian Calvo. He's the founder of Fabian for Liberty and the Note House. Fabian, happy holiday. Thank you for joining us.
Yeah, hey, Mo, Merry Christmas. Thanks for having me on.
All right, Fabian. Well, I want to get off this podcast by talking about a recent current event that just happened today, December 12th. The House just passed a bill, and in that bill, which was a spending bill, it had other provisions in there. One of them was written by Citigroup, and it changed the playing field in the derivative market. I wanted to get your thoughts on that and the implication that will have on the economy and the market.
Yeah, Mo, it is as criminal as it gets. And let me just say that several months ago, I tried to tell those in the conservative/libertarian political sphere that voting for Republicans would not change the course of this insane criminal government. And sure enough, Republicans overwhelmingly supported this $1.1 trillion spending bill that actually funded Obama's amnesty as well as fully funded Obamacare. But I'd say probably the most sinister thing is what you just mentioned, which is the derivatives. You literally had Jamie Dimon, who should be in jail for, at the very least, manipulating the commodities market. That's been proven. You have him calling and lobbying multiple congressmen in both Republicans and the Democrats to get them to support a bill that's actually going to allow the big banks on Wall Street to speculate in the derivative market using taxpayer-funded banks. So in essence, they reap tremendous profits by this speculation, but the speculation, if they lose, comes at the hands and at the risk of the American people. It is really unprecedented, I think, in the history of economics, Mo, and it shows you, in my personal opinion, this is truly the end of the road for this current business cycle, because at the very end of the road, you always see the criminality at its highest level.
Yeah, this is Crony Capitalism at its best. And interesting, I was on Facebook this morning and I saw a article posted by Martin Armstrong on his website. And he basically said that Jamie Dimon went around telling lawmakers to either shut down the government or repeal the Dodd-Frank Act so they can go back to doing whatever they want to do in the derivative market and, like you said, manipulate it. So, I mean, I'm not surprised to hear this because, I mean, Wall Street has been in bed with Washington, D.C. for many, many decades now.
Yeah, it is. But it for many decades is accurate, and we know, of course, the Federal Reserve and the stranglehold it has on the republic and its ability to, via its owners, the big mega Wall Street banks and international banks, to buy and sell and pay for many of these politicians that vote for these bills that are supposed to be representing we the people. I would say, though, Mo, in the last, perfect example of this is the federal debt. If you look at the deficit under Obama alone, it's up 70%. So it's truly that hockey stick type graph where at the very end, it just grows exponentially. And that's where we're at now. A lot of people say that, we've been through this before. I just want everyone to know that this time it is different. This time there is no other economy in the history of economics that has done what the United States is doing right now. Certainly no other that has been able to survive and prosper when they're printing money and buying their own debt.
I completely agree with you. Now, we don't have much time on this podcast. I want to move forward to our next topic and talk about the economy in general. Now, with oil, gas, and most commodities, the prices were down in 2014. Do you believe we're experiencing deflation right now, or you think we're still experiencing both inflation and deflation?
Yeah, I think we're still seeing the effects of some inflation, especially in food prices. I don't necessarily, and I do think, prior to a reset of the global currency, there will be a major down leg, a big deflation, certainly in the stock market and in the real estate market. I personally believe that's going to unleash some of the most massive money printing measures we've seen in history. That said, oil market's a little bit different. You have a couple different factors in play here. One of them, I think, is the Saudis directly challenging American oil production. Of course, America has surpassed the Saudis as having the largest reserves. But in order for most of those new wells to be drilled, they need to be the oil needs to be above $60 a barrel. And so the Saudis, I think, are trying to collapse the market in order to gain market share and slow down the progression of drilling in America. I think another factor in here, so I think we have that at play. The other factor at play is we know that the Russians need to have oil above $100 a barrel in order for their economy to be profitable. Russia's economy is like a big natural gas energy company, if you will. And you have the neocon faction in the Republican Party and in the Democrat Party wanting to start World War III with Russia. They're trying to collapse their economy, and they're doing that by trying to completely manipulate and destabilize the oil market.
That's an interesting theory there. The theory about Saudi Arabia trying to collapse the U.S. Oil producers. A lot of them, the shale producers, need oil, as you said, at least $60. I heard even $70 or $80 at least to gain a profit. So those are all interesting theories there, and I agree with you that maybe I think the Saudis have a play in this, and I think they're trying to punish Russia as well for what they're doing.
Yeah, Mo, I would also add to it is that to me it really shows a prediction that I've been making for some time now is that we're about to see OPEC break up, I believe. And already we see some major fractures between Iran and the Saudis, who naturally hate each other's guts, and a lot of these other countries. But I also think you see the Saudis beginning to recognize that America's contract with them with respect to the petrodollar and supporting them militarily maybe isn't as ironclad as they may have thought. Because, I mean, they're probably sitting there saying, well, look at Iraq is falling to ISIS. ISIS has taken over a third of the country. The United States spent trillions of dollars there and are allowing that to happen. And so I think, the Saudis may say, well, you know what, we may need to come up with an alternative plan here, maybe move closer to the Chinese, to the Indians and other countries for maybe some of that military protection. If indeed they do that and they depeg their oil sales from the U.S. dollar, that's going to be very interesting and probably cause major turbulence for the U.S. dollar.
And we're starting to see a lot of movement within countries trading outside the petrodollar system. So I think eventually the petrodollar will die, and maybe another currency or basket of currency will replace the dollar. So moving on and talking about the general economy and the Federal Reserve. Now, there's a lot of talk with the Federal Reserve officials about raising interest rates. I don't think they can raise interest rates, and I don't think they want to. So I want to get your thoughts on that. Do you agree with that?
Yeah, well, I think there's been a lot of talk about raising interest rates. Clearly, I think if interest rates are raised, and I should preface it with saying that this derivative bill that we've just seen that's going to allow the big banks to expand their derivative portfolio, keep in mind that in the run-up to the last housing boom, that's what led to it, is the speculation, new financial instruments that were created, the credit default swaps, the mortgage-backed securities that were bundled up. And so we just had that green lighted again. I think this plays into my overall real estate forecast that we're going to see prices over the next year continue to go up in real estate and likely see a return, and we're already seeing it, of no money down loans, because at this point I think the Fed recognizes the only way that it can push the illusion of an economic recovery is by continuing to expand the credit market. And other than that, there is no real growth.
I agree with you there. I mean, look at the economy, look at the real unemployment numbers, look at the GDP growth or lack of. There's not much movement going on in the economy. I think eventually, don't know the exact timeline, this whole thing is going to blow up on their face. So let's moving on. I want to talk about the real estate market, which is your expertise, and get your thoughts. I know you probably heard about Freddie and Fannie Mac recent announcement that they're going to implement 1 to 3% down mortgage program. I want to get your thoughts on that and the impact that's going to have in the real estate market, if any.
Yeah, well, it's going to have a major impact. And like I said, I've been saying for some time that after the midterm elections, you were going to see no money down loans come back in style. Those of course pushed by the same agency, Freddie and Fannie, that were instrumental in fueling the last housing boom. And look, I mean, I think these Keynesian economists, these central planners that think they can manage the economy and, push a button here, pull a lever there, they recognize that the largest home buying demographic right now is the millennial generation. The millennial generation is saddled with college debt. They don't have a down payment, and they need credit if they're going to buy a home. And so they want to fuel that millennial generation with no money down loans to try to boost the real estate market. And look, all we need to know, Mo, to know the direction of where things are headed, is that the big banks today, as we said at the beginning of the interview, just had the U.S. government green light, or at least the House, the Senate's about to do the same thing, green light a measure that's going to allow them to reap incredible rewards from their speculation. But if they lose, it's the American people who have to pay. And it's just insanity, really.
I mean, it's been like that ever since the financial crisis. All the losses from Wall Street had been socialized, and all the profit had been privatized. We don't see any of the profit that Wall Street makes. So the system here is completely screwed up. And
yeah, well, Mo, not only, Mo, do we see that, what you just so accurately said, but we also see that since the Fed has kept their interest rates at close to 0%, it has literally robbed the middle class saver of over $9 trillion in what otherwise would have been interest payments made since 2001. So it's really a double whammy. They're being able to socialize their losses on the back of future generations and current Americans, while at the same time stripping the average American of having a little bit of interest and return on their money. Instead, if they want to have any type of return, they have to go speculate and they have to go gamble in the casino known as the stock market.
And that's a great point there. Now, I want to get your thoughts on the market and economy in general for 2014. We're close to wrapping up this year. I want to get your insight or any surprises that you would like to share with our audience.
Yeah, well, I think for 2014, we saw asset prices continue to rise, fueled by credit expansion. I think 2015 is going to be very similar. This is, like I said earlier, the end of the road business cycle. And at the end of the road, if you look historically at business cycles, it's always, like I said, that hockey stick graph. And that's what we're seeing now. And we're going to continue to see the big banks with colluding with the federal government to expand credit, to fuel larger bubbles, and to create an illusion of wealth. And it's going to end very badly. I personally don't see that ending in 2015. I think 2015 will mirror 2014 in many ways, but certainly I think prior to the next presidential election, a lot of this stuff is usually timed as well around political events. I think we'll see a big leg down in the U.S. economy.
And then also, I want to get your thoughts on the real estate market for 2015. Do you still think there's money to be made in the real estate market for regular Main Street investors that want to try to get into real estate?
Absolutely. I mean, we're seeing an uptick in cash investors in pretty much every market that we're investing in. And I'd say that also people need to recognize that in the run-up to in housing prices, there's tremendous opportunity, but there's not opportunity for those people that become pigs or become greedy. I think where the money's to be made is finding value, finding a good deal, and selling that deal as quickly as you can. That's one of our investment strategies at the Node House. I think for 2015, and then I should say that, this will likely continue into 2015. When the next shoe drops in this housing market, when the market goes down, personally, Mo, I think it's going to be one of the best buying opportunities we've ever seen in the U.S. Housing market.
Oh, that's an interesting insight you just gave there. So, Fabian, I'd like to thank you for coming on for Wall Street from Main Street podcast. I know you're short on time, and hopefully next time we can have a longer podcast with you. If people want to find out more about what you do, where can they go? And also share about your seminar that you're going to have in London pretty soon.
Yeah, so January 23rd and 24th, I'll be in London. Friday evening on the 23rd, we're going to talk about I'm going to be doing a lecture on the global economic reset. And Saturday, I'm going to be teaching basically investment principles for investing in the U.S. housing market from pretty much anywhere in the world, as thousands of people that I've already taught are doing. So I'm really excited about that. Had a lot of people over in London that wanted me to come out there, and so it's going to be great. People can check out FabianForLiberty.com, FabianForLiberty.com, or FabianCalvo.me for more information on myself, and that's where to go.
Okay, great. Thank you, Fabian, and hoping you come back on again soon.
Anytime.
Have a happy holiday.
Yep, you bet. Anytime. Thanks for having me on.